Trading futures involves speculating on the future price movements of an asset, such as commodities, currencies, or stock market indices. Here's a guide on how to trade futures. Education and research. Learn about futures markets, understand the underlying asset you want to trade, and conduct thorough research to analyze market trends, news, and factors influencing prices. Select a broker. Choose a reputable futures broker that offers access to the markets you're interested in trading. Ensure the broker provides a user-friendly trading platform with access to real-time data, charts, and analytical tools. Open an account. Follow the broker's account opening process, providing necessary personal and financial information. You may need to meet minimum deposit requirements. Develop a trading plan. Define your trading objectives, risk tolerance, and strategies. Determine entry and exit points, position sizes, and risk management techniques. Place trades. Use the broker's trading platform to enter futures trades. Specify the contract type, quantity, and expiration date. Choose between buying or selling based on your market analysis. Monitor positions. Keep track of your futures positions, monitoring price movements, news events, and economic indicators that may impact the market. Close positions. Decide when to close your futures positions to realize profits or cut losses. You can exit trades manually or set stop loss and take profit orders to automate the process. Continuous learning. Stay informed about market developments, refine your trading strategies, and adapt to changing market conditions to improve your futures trading skills over time.